development, which is also something that is important for us as an economy. So on balance, a very good budget. The Capex from a government standpoint stays on course, which is something that we ideally would have liked. And the fiscal discipline stays on course as well.
Well, that's right. The fiscal discipline stays on course. Capex, along what clearly what the economic survey as well as the CA were highlighting would be the trend as far as Capex was concerned. But then you can't have Capex and the consumption boost at the same time. So the expectation of doing 20-25% on Capex and then also providing income tax relief, which has been the big focus of this budget, can the two be reconciled together is the big question. So the government this time around has prioritized consumption and relief for the middle class. And if you just bring up all of those stocks, FMCG stocks at this point in time, the new age stocks, Zomato and Swiggy and all of the others, and Mangalam is standing by with a rundown of everything that's moving. That side of the market clearly is firing at this point. But let me bring back our budget editors into the conversation as well, Atanu Chakrabarti and Ratin Roy. Mr. Chakrabarti, to you first. As far as the big numbers were concerned, pretty much steady as you go.
Yes, very much in a sense that the borrowing numbers satisfy the requirement of I was looking in containment, they have actually gone in for reduction. So even if numbers don't hold at the end of the year, still the borrowing numbers, the gross borrowing numbers are lower than last year, assuming a fiscal deficit at 4.4%. Yeah. RE is at 4.8%. So a good glide path there. Consumption, Philip, given through, as you just mentioned. Were
you expecting them to go as far as they have? Or has it surprised you on the positive side?
Frankly, no. I am pleasantly surprised and very happy about it that the fiscal reduction, debt reduction is, because that opens up the credit growth for the industry in general, which has been sort of accounted for in a lot of expenditure proposals. They're depending upon bankable schemes.
Right.
So unless you open up that space and crowd out, you are not going to get that. So there is, I can see a design in the entire thing, that fiscal reduction, which was important, and that builds upon a lot of bankable schemes that have come.
So Ratin Roy, they have delivered on the 3 C's that we were talking about. Capex, you can argue about whether they could have done more, but more importantly on consumption, they've clearly delivered more than what the market or even the consumer was hoping for. And even on consolidation, they've stuck to the glide path.
Yeah, well, I was not expecting them to not stick to the glide path. I was not at all sure whether the government would engage in yet another round of wishful thinking. Quite frankly, I think the execution capabilities of this government, as far as Capex is concerned, has hit its limits at 11 to 12 lakh crores. Now, the point is to try and promote Capex in the private sector, where the real execution capability is. Looks like this is what the government has in mind. Yeah. But I'd like to puncture one balloon. Everyone here that's come on your program so far, me included, is in the top tax bracket. And everyone who pays tax in India is in the very rich part of the population. It is facile to call them middle class. So what has happened is, at the cost of 1 lakh crores to the exchequer, which is a small price to pay, is a major increase in the regressivity of our income tax system. Till yesterday, you had to earn 3.5 times the per capita income to start paying income tax. You will now have to earn 6 times the per capita income, 6 times the per capita income to start paying income tax. So by no stretch of the imagination can we say that these people who begin to pay income tax at 6 times the per capita income belong to anything other than the top 5 or 10% of the population. So that regressivity has come at what cost? Well, it has come at, the tax system has become more regressive because if you look at the indirect tax burden, it's the same. So you have the progressive part of the tax system, which is direct taxes, is now nicer to the rich people. The indirect taxes, where the burden is shared between rich and poor, remains high. And therefore, what ends up is the proportion of taxes relatively poor people who don't pay income taxes but do pay indirect taxes is now greater. So this is, in that sense, on the tax side, a regressive budget. It will increase consumption of you and me. It is going to do nothing, absolutely nothing, for consumption of the Aam Aadmi.
Okay. Well, we'll have to wait to see, but the market reaction at this point in time is 2 thumbs up. Manglam, very quickly, run us through what's happening on that side.
Well, it is a consumption budget, Shireen. Tell you, no income tax payable up to 12 lakh rupees, income of, up to 18 lakh rupees saving 70,000 rupees, and income of up to 25 lakh rupees will save over 1.1 lakh in taxes. What does this do? A shot in the arm for all the urban consumption names. So we have, names like Jubilant Foodworks, Zomato, Trent, DMart, the ones who have a higher propensity of revenue coming in from the urban centers doing extremely well. No tinkering on taxes for all the sin goods. Those stocks also doing extremely well, and some support coming into rural and agri names has a positive impact on larger FMCG names as well. The FMCG index had been underperforming. The street was hoping for some sort of shot in the arm coming in from the budget to consumption. The government has gone ahead and made its 2 steps. Now the rest remains on the FMCG industry to go ahead and deliver those growth numbers. Most of these stocks are actually trading very close to their 10-year averages as well. So from a valuation standpoint as well, this budget has a trifecta of all positive news coming in from the consumption sector. And we're seeing that in names like Jubilant Food, Trent, ITC, all of them being among the top gainers in today's trading session.
They certainly are, but let me go back to Anish before I let him go. Anish, in what way does what has been delivered today change the needle? Do you believe, as far as private investment is concerned, that's been the big hope and the big ask in terms of consumption as well? And also from a manufacturing standpoint, the measures announced by the budget, including on the customs side, on each of these 3-pronged areas, how does the needle move post the budget?
I think it just accelerates our pace, Shireen, because the fundamentals have been very strong in the economy. We've seen short-term blip from a demand standpoint. With the consumption incentives given here, hopefully that is addressed. The more important thing is to ensure that we can manufacture in India at a much lower cost than the rest of the world. And that will allow the economy to grow at a much faster pace. And a number of measures taken here are steps in the right direction to make that happen.
Okay, got that point, Anish. By the way, I just want to point out, trying to go through more and more of the annexures. So while the budget speech spoke about the reduction in TDS thresholds for certain segments, for instance, the LRS limit 7 going to 10 lakhs, there is an increase in TDS rates or the thresholds for a whole range of payments. Dividends for an individual shareholder, income in respect of a mutual fund from a specified company undertaking, winnings from lottery, crossword puzzle, winnings from horse races. So there are several cases where the thresholds have been increased. So that's what we have at this point in time. Just want to go back to the panel here, and Sunil, if I could come to you. What is the big picture takeaway? The headline clearly seems to be that the middle class has finally gotten the relief. But one ask, at least I have not found even in the fine print so far, which is corporate India was asking that new manufacturing companies should be given more relief, that concessional income tax rate of 15% should be brought back, if not 15, 18%. But as of now, we've not seen evidence of that in the speech or in the documents. Your overall take on what this will mean once we go beyond the personal income tax bonanza?
So thank you for having me. So I think, Surabhi, a lot of eyeballs and discussions is obviously pertaining to the income tax relief, and rightly so. The government has given 1 lakh crore in the hands of crores of Indians, and that is a welcome step because I think the economy was suffering from low consumption, a combination of obviously maybe less disposable income as well as tight liquidity situations. So the liquidity situation was eased off a little bit 3-4 days back when the central bank pumped in 1.5 lakh crore, and now this 1 lakh crore additional also has the potential of at least kickstarting a little bit of a temporary blip in consumption. Having said that, I think capital expenditure, which was slated to be 11 lakh crores, the government has not been able to spend the entire amount, maybe because of inflation, everything got deferred. And to that extent, the kickstart as far as Capex is concerned has got deferred a little bit. Luckily for next year, we are again looking at a 10% growth on this lower 10 lakh number. And I think that is something which is very interesting and is very, very needed. As far as your comments are concerned, I think a lot of announcements were made in terms of, pushing manufacturing in India, particularly, industries where it's more smaller industries, SMEs, with a lot of imports, a lot of manpower required, like textiles or leather or toys and so on and so forth. So I think the intent is very clear that we need to make India a powerhouse in terms of manufacturing also. We still have to see the fine print, but on the face of it, obviously this 15% has not been revised. But on the infra side, I think there has been a 5-year extension in terms of fresh investment, which will
Absolutely,
be
the sovereign wealth funds.
benefit. So I think it's a good balance. I think overall, it's a very balanced budget. I wouldn't say it's like a superlative growth-focused budget, but this 1 lakh crore of added income in the hands of crores of Indians, I think that's a key positive.
Yeah, absolutely. And I just want to add to that the annexures show a whole range of announcements to make GIFT City more attractive. Again, that's a stated roadmap to try and get in more longer-term capital through that route. In fact, let me answer, and one more point we should keep in mind on crypto, by the way, there is a clear reporting framework that has been announced. It says there is a proposal to bring an amendment in the Act for this new reporting framework for all regulated entities, which would be crypto exchanges. They have to give information on digital virtual assets in a specified format as the government asks for it. So that's one. But coming on this point, if I could throw this to Ashok and maybe to Dinesh as well. Ashok, coming to you first. While, visibly we don't have that headline on 15% tax for new manufacturing companies, I don't know if you had a chance to go through some of the GIFT City provisions or the other provisions, sovereign wealth funds we've spoken about. Do you find anything else there that could excite longer-term investors looking at India?
I'm actually just looking at the fine print. It's just been delivered to me. And there does not seem to be anything which is specific. I mean, obviously, we've all spoken about the infrastructure. We've all spoken about the one question that's still unclear is that if a domestic fund, in other words, if a fund from India was to relocate to the GIFT City versus a global fund being relocated to GIFT City, whether the relocation from India to GIFT City also triggers the same benefit or not. That's not been clarified in my view. Where there's clarity about global funds being relocated to GIFT City, there is clarity.
Yeah.
I haven't been able to pick up whether, if for example, a normal fund, an AIF was to decide to relocate to GIFT City, whether that capital gains would be exempted or not. I haven't got that done. But there is language around parity on long-term capital gains on transfer of securities between residents and non-residents. And there was some lack of parity when changes were made last year, both in terms of property as well as, of course, in securities. And I think they seem to have brought that parity back. That certainly seems to have been provided as a clarification. But over to Dinesh for that.
I just wanted to come in with some of the sectoral outlays, guys, and maybe we should just bring up these numbers for the benefit of all of our viewers. The defense sector outlay has seen a reduction at 4.91 lakh crore rupees. The budget has allocated 4.9 lakh rupees for the defense ministry. That's down from 6.2 lakh crores in the July 2024 budget. So that's as far as the defense allocation is concerned. At 4.9 lakh rupees for defense, down from 6.2 lakh crores in the July 2024 budget. Rural development, an outlay of 2.6 lakh crore rupees. Agriculture, 1.7 lakh crores. Education, 1.28 lakh crore rupees. Health, 98,311 crores. Urban development, 96,777 crores. IT and telecom, 95,298 crores. We'd have to also see whether there is an enhancement or a reduction across, but defense, there is clearly a curtailment as far as the outlay is concerned at 4.91 lakh crore rupees versus the 6.2 lakh crores. You wanted to come in, Ratin?
No, I just wanted to say that one good thing in this suit boot budget, which should help all the suit boots who are celebrating this so-called middle-class tax cut, is a very promising announcement the finance minister made, that she's going to cut the tax code in half. That's been long overdue, long overdue. And much as I might be, sad at the celebration that's going on about this, people earning 6 times the per capita income getting a tax break, lowering the tax code bill, I think, should incentivize the growth in taxation. I also want to caution about the numbers for next year. The implicit buoyancy of 1.3, 1.4 that is implied in this budget is very rarely achieved by government, especially at a time when growth is tanking. So that this particular cut, although the absolute amount is only 1 lakh crores, might actually put pressure on government outlays. On defense, I want to say I think the government has been very realistic. They're unable to spend on defense. So there's no point allocating money for defense when you can't spend any money. And I think the government has done quite the right thing to make it more realistic for next year, because they have a good idea about how they're going to be able to allocate money to defense next year. So all in all, I think on the expenditure side, the budget has been prudent, and therefore you're seeing more modest outlays, because the execution capability of the government is limited. And it is for that reason, and not because of the tax cuts, that the expenditure side looks, moderate.
Fair point, and that's an interesting and important point that you make as far as the defense sector allocation is concerned. Mr. Chakrabarti, you've been going over the fine print. Anything there, and especially as far as the housing sector, etc., is concerned, cement, steel, what do you believe that the budget does in terms of infrastructure, housing specifically?
Three things. For defense first, I guess we need to, because these are reasonably finely balanced. So perhaps we have to see between the revenue allocation, because revenue was about 3 lakh crores, balance about, so it was about 4 point odd something.
Right.
So I'm a bit surprised when we say 6, because there are some other allocation for roads, etc., which keep changing. So I guess a fine print needs to be seen. This is unlikely. There's not much of a scope for cutting, because almost 75% of the capital acquisition in any case is domestic.
Correct.
So therefore, the numbers are reasonably well known. So that's one particular thing I'm happy about is about IFSC, which we just discussed.
The gift city,
A, income tax, B, getting AIFs in. Because if you see, the corporate tax is at 9.8% growth. Less than 10.8% envisaged, 9.8 lakh crore, about 40,000 crore less than what was envisaged at B stage. It has not really kept up pace. So the only disruptors in the economy are going to be the startups and GCCs, where there's a lot of private equity movement, which could happen only through IFSC. To that extent, one again has to see the fine print of regulation and everything, but at least a correct direction on the things to come.
Correct direction, and of course, as we've been pointing out, we are poring over the fine print at this point in time, because the speech did not focus on the details which are available in the annexures. But let me toss it back to you in Bombay.
Shireen, thanks very much for that. I'm just looking at the market, and I don't want to sort of put everything which is happening on the budget. I mean, after all, it's for Saturday as well. So we must keep that in mind. But FMCG, of course, the index is up almost 4% now. So if anything, it's picked up a little bit more steam. And the auto space is up about 2% as well. On the other side, defense, as you said, Shireen, in terms of allocation, sharp deceleration, right? The index is now, there's a nifty defense index, it's down 3%. And the PSC, CPSC, a couple of these government company indices, oil and gas, they're all down between 2 and 3% at this point. The metals index is down about 1.8% as well. And IT as an index is down about 1.5% as well. I just want to go back to Sunil for a bit. Sunil, with this sort of 1 lakh crore boost to the, the taxpayers, as an investor, does it make you any more bullish directionally to look at that area? There is on this Friday, we'll have something from the RBI as well, maybe a rate cut.
1.5 years. Consumption generally has been pretty slow. Combination of maybe a little bit of inflation, maybe a little bit of fatigue post the huge boom we saw in the consumption post COVID and so on and so forth. I think a little bit of liquidity squeeze also from NBFCs and banks in particular post the regulator directing them. So I think all this is getting sorted to some extent. On the fundamental side, we have had good monsoon season, good crops. I think crop prices are good. So the rural income should be pretty handsome or should see a pretty handsome growth. You had RBI, which infused 1.5 lakh crore only a few days back. So liquidity has been to some extent taken care of. And now we have this huge boost of 1 lakh crore flowing into the hands of Indian consumers. So I think at the margin, obviously, yes, there will be some move up as far as consumption is concerned. However, what is happening on the consumption stocks is a combination of a lot of things. One is they have never been cheap. They are not cheap. So there's a valuation headwind. Second, there are a slew of new products coming in, and particularly with this advent of digital economy and D2C brands and so on and so forth. To some extent, there's been a cannibalization, even in terms of existing players losing some market share. So I would say that at the margin, this is positive, but this is not something which would lead, an investor to double or triple the weightage as far as consumption is concerned. Maybe, a slight tweak. But for the economy, I would say it's a bigger boost, because the economy needs consumption as well as Capex to move back to that 6.5–7% nominal and real and 10% nominal growth rate. Rate cut, I'm not sure whether it's going to happen very soon. But the good thing is the path to fiscal prudence is maintained. And to that extent, the environment as far as interest rates in India is concerned is pretty, on the downside, which is refreshing compared to what is happening in the world.
Okay. Well, point taken on the consumption boost. And I also take Ratin Roy's point that, that also means that there is that much less in terms of welfare expenditure. You cannot take away from the fact that we have a very large number of people who are not earning even 6 lakhs, forget 12 lakhs a year. But Mr. Dinesh Khanna, to come back to the fact that there is more money in the hands of those who would take retail loans, 12 lakh rupees is the minimum income tax limit now. Does this mean that banks can now have more of a retail loan, or do you see the Capex baton being picked up at all by private sector, given what the budget has said?
No, I think there is a very clear focus when it comes to the infrastructure investment, and also they have brought in the PPP concept also. So I think part of the infrastructure also, they have also indicated that even state government are expected to join them in this PPP investment for the infrastructure. So I think infrastructure boost will certainly be seen. And when it comes to the retail borrowing, maybe, there are, of course, when it comes to the consumer unsecured borrowing, that is expected to remain expensive. But nevertheless, I think as far as home loan, etc. are concerned, there will be enough disposable income to support the EMI. I expect that even that sector will get a boost with this kind of a income tax relief which is seen. And also I would like to mention that, now the startup also, they have increased the guarantee scheme for startup as well. So I think to that extent, they are addressing all the very critical components which are required to be addressed for giving the required push to the economy.
All right, got that point, Mr. Khara. Just going back to Dinesh. Dinesh, earlier, I asked that question to Ashok as well. Let me take that to you now. Whether there is anything further that you've picked up in the annexures, in the fine print. There are lots and lots of announcements on gift. One, we discussed, but like Ashok was saying, that there still needs to be clarity whether there is a domestic relocation from, anywhere in India to gift, whether that also gets a capital gains exemption. Anything else which could boost investments and flows?
Lots and lots of things. So far as GIFT City is concerned, income arising by way of ship leasing is specifically exempt now. ETFs have been brought under the ambit of what can be done in the GIFT City. One very welcome thing which one has seen this time is that most of the extensions are for a period of 5 years rather than 1 year, which you see at a time. So for example, the income of a startup is exempt for a further period of 5 years straight away. So up to 30, whatever startups are there, 5 years exempt, which is again a very, very welcome thing. One very interesting change, and the finance minister did mention this in her speech, but I didn't pick it up at that point of time. There is this concept under Income Tax Act that if a foreign company has a significant economic presence in India, then it is liable to tax in India. This, of course, applies where there is no tax treaty. And the question is that if the significant economic presence is only for the limited purpose of export, would there be a tax liability? And that has been clarified, and that should provide a relief to several people, because that was something which was acting as a barrier to exports. So again, very, very welcome. So quite a few clarifications out there.
All right, Mr. Kanabar, we'll come back to you, sir. Let me bring in Amitabh Kant. He joins us now. Mr. Kant, always a pleasure. Many thanks for joining us here on CNBC TV18. She saved the best for last. It is a budget that's delivered on the hope of boosting consumption, on delivering for the middle class, and that was the promise that the Prime Minister had made. On balance, Mr. Kant, your big read, your big takeaways from Budget 2025.
So, Shireen, first and foremost, I'd say that the main attempt has been to give a fillip to demand and put more money in the hands of the consumers. That should give it a big push. But it has been done in a fiscally responsible manner. She's also looked at the macroeconomic stability of the economy, because 4.8% fiscal deficit in the RE and aiming at about 4.4% for the coming year. Also, I think if you look at the budget, there's a huge focus on labor-intensive sectors. The first time I've seen so much of emphasis on tourism, on textile, on footwear. So labor-intensive sectors, there's been a focus, but I was particularly glad that the startup fund of funds has been replenished by another 10,000. This will have a huge multiplier impact, because there'll be a risk sharing with the venture capital funds. And also this putting another 20,000 crores for innovation, and saying that there'll be a separate fund for deep tech areas, which requires patient capital. So that should be a big push to the startup and the deep tech movement in India, which is job creating in many ways. And I would also say that two good things that have happened in the budget is that, I'm a great believer in free enterprise and private sector. The focus of taking asset monetization forward from 6 lakh crore between 21 to 24, now to 10 lakh crore. And that means asking government departments that put out your assets for monetization, and private sector to come in and do better operation and maintenance. And secondly, to ask every ministry, prepare a pipeline for PPP projects for the next 3 years, because the government departments were getting very comfortable by owning and managing infrastructure, and that was causing great inefficiency in the economy. So putting all these out and bringing in greater thrust to PPP will be a very good thing. The total allocation for infrastructure on Capex has been kept at about 11.2 lakh crores, which is a little higher than the previous time. But infrastructure, greater thrust on execution and implementation of infrastructure projects is very, very critical. I would have felt that there should have been a much greater, even a greater emphasis on infrastructure, because infrastructure boost gives a long-term impact. And lastly, I feel that there is a clear realization in government that several departments and regulatory bodies have caused a regulatory cholesterol, and they need to scrap rules, regulation, procedures, and acts all over. A huge amount of scrapping of laws, etc., needs to take place. And rightly, the finance minister has talked about laying a huge emphasis on ease of doing business and creating a committee which will come out within 1 year, a report. I think it should be much quicker, much faster, because at the state level, a whole range of deregulation is necessary and is required. And this, to my mind, is very critical. And I also feel that this emphasis on clean tech mission is very important, because today, if you look at it, solar, we are importing 80%, EVs, batteries, we are importing about 75 to 80%. All these things require an approach of Make in India in a very big way. And so overall, I rate the budget as giving a major push to demand creation in the Indian economy, and a very macroeconomic stability is really the focus, despite this big giveaway of 1 lakh crore.
Yes, it is a big giveaway in terms of the revenue foregone for what the finance minister has delivered as far as direct taxes are concerned. But Mr. Kant, this regulatory cholesterol that you spoke of, and of course, a lot of what was announced in the budget will be work in progress. As you pointed out, a committee will now look at these areas of deregulation and so on and so forth and come back within a year's time. But on the infrastructure side, because you said that you would have hoped for the government to do more. At 11.21 lakh crore rupees, the Capex, do you believe that that is enough? Do you believe more should have been done?
Yeah, but the intention, again, Shireen, is that you have better quality of infrastructure creation with 11.2 lakh crores, but you also push out a lot of government assets for private sector management through the asset monetization pipeline. Which has done well. They were able to achieve the 6 lakh crore and now to target for 10 lakh crore. And also say that we are going to have more and more of PPP because in the last 7-8 years, there's been a slowdown on the public partnership projects, and that requires you to do a lot of homework in terms of land, your ability to get all clearance and then put them out for bidding. So you need, every ministry has been asked to do this in the next 3 years. That, to my mind, is very important. It's a clear message that the government believes in private sector and it believes in private sector management of infrastructure creation. That's important. I really feel that the next bid round is the fiscal bid has been done, and the next bid is to allow, in the monetary policy, to allow greater credit to flow, because I'm a great believer that the private credit to GDP ratio in India is still low at about 50%. That needs to increase, and the RBI needs to pick up the baton and allow greater credit to flow to India's budget.
Right. Okay. Shireen, I just want to quickly make a mention on what's happening to insurance names, and they're all up on your screen right now. HDFC Life is down. These are big moves. 6.5%, 6% on HDFC Life. Max Financial is down 4%. ICICI Pru is now down 7%. And you can look at something like a SBI Life, which is down about 6.5%. It's not something which has been done for insurance, or there's no negative per se for insurance as a space. It's not directed at insurance. It's just that the new tax regime has been incentivized heavily in a big way, and this will make, the no tax up to 12 lakhs will make a lot of people think to move. The thing is, under the old tax regime, under the sort of 80C benefits, etc., insurance gets a fair bit of relief, tax reductions, and if people move from the old to the new, I think that essentially is the reason why these insurance companies are selling off. I saw estimates ranging from about 5 to 7% of individual new business premiums on account of this 80C benefit. So it's not that large also, but in the margin, it's certainly negative. I think Yash is with us for a quick take. Yash, over to you.
Well, Prashant, I want to explain two things. One is, of course, the obvious question that if the government is going ahead and increasing FDI to 100%, why are life insurance companies or insurance stocks reacting negatively? Let me clarify that first. FDI going to 100% has no impact on the listed companies, because what comes in the way there is the minimum public shareholding norms, where the promoter can only have 25%, 75% have to be in public. So, of course, FDI of 100% does not matter at all as far as the listed life insurance companies are concerned. So, there is no positive coming out of there for the listed life insurance stocks. Then why are they down today? That's exactly what you were also alluding to. Government's move to sweeten the new tax regime. Now, of course, as per the new tax regime, if an individual plans to take exemptions, which the government plans to introduce under the new tax regime, then there won't be any tax payable up to 12.75 lakh. Now, what that creates the fear is that more and more people, if the new tax regime becomes beneficial to them, will look to move towards new tax regime. And what that does is that it defeats the purpose of buying life insurance or health insurance for the intention of saving taxes under 80C as well as under 80D. You spoke about the estimates, about 5 to 7% of the life insurance premium still comes for the intention of tax saving under 80C, and that is the impact which might get impacted for life insurance companies as well as on the 80D side for health insurance companies if people indeed find the new tax regime more beneficial, more attractive, and start moving there. And that's exactly the fear which is rattling the life insurance stocks particularly today.
Yash, I just want to make one, you said FDI is not negative. Wanted people, biggies come in with 100%, won't that raise competition?
So, Prashant, it is positive for the sector because, of course, a lot of foreign capital, a lot of capacity with that would come.
No, I'm saying from if you're already an incumbent large player, it raises competition, right, at the end of the day?
Correct. It will increase competition, but, I mean, with a penetration of 3%, insurance density of just $92, much lower than developed economies. I mean, it's a large pie for all players to go there and acquire. So that's not a very big concern.
Point taken. So they're not falling because of competition. They're falling because the tax stop
the stock move is basically this thing.
Because the tax stop may not work anymore in their favor.
My only point is that FDI thing is also not positive. I mean, if you're from a competition perspective, at the margin, 3% penetration, but the point is it's a small pie expected to go up, but right now it's 3%. So,
Absolutely. But in which there will be foreign competition. But actually, the nature of the stocks that are in the red today clearly indicate those dependent on public spending are the ones that are falling.
Absolutely.
So if you look at the names, RVNL, IRCON, BEL, I mean defense budget cut down, JSW Energy, IRFC, all these are,
everything infra, defense, oil and gas, PSU, CPSE, everything is coming off. Energy, so that's the pack.
That big Capex push has not come through, and some of these stocks, by the way, had recovered from the recent bruising fall. They'd all started rallying in the run-up to the budget. So positioning was for a much bigger Capex announcement, which
maybe that the market is overestimating or overreacting to this. Because if you look at the revised budget, actually Capex has gone up by 10%. Because they've brought it down from 11.11
from RE to B, it's gone up. From B to B, it's
so if you look at it from RE to RE, the expansion last year also was only 10%, and this year also is 10%.
Which is what the economists have been saying, that in line with the nominal GDP growth, but perhaps the market was expecting for a bigger number.
Nimish is pointing out that Dixon is down 6-7%. It is indeed down. It was down 10%. It's down 7.5%. We had the Dixon management with us earlier in the morning, and we were talking to him about the PLI. There is, of course, electronics component PLI. Which is a new thing, 25,000 crore allocation, which was expected. Maybe it'll come out of the outside of the budget. We don't know. But he was also saying that the earlier PLI, which finishes in FY26, maybe there is the mobile PLI, basically, of which Dixon is a beneficiary. Maybe there's some extension, etc. Which I don't think that was really an expectation built into the price. It was something I think we asked him, so he said, well, we need it. But it's a big reaction, and there are many listed other players as well. We should just sort of run through those names: Keynes and Amber and so many others, right? I mean, Sirma, PG Electroplast, and we'll put all those names up for our viewers.
They're mostly down. Sirma is down about 2%. Keynes is down 0.5%. Not too much, but the price damage on Dixon is the highest at this point in time. Perhaps the stock market also didn't pay too much attention to what the CEA was saying, and then our team was flashing this even yesterday. The commentary that came through. The indication this time actually was there in the economic survey. The government saying that the onus is now really on the private sector to fire up the animal spirits. But even having said that, I think that 10% increase in Capex is still what the economist was saying. Maybe the market wanted more. I think Shireen's coming in.
Surabhi, this is exactly what I've been pointing out. And I think Anantha Nageshwaran made it very, very clear that to continue to expect the government to do 20%, 25% is an unrealistic ask, especially when you're also asking the government then to provide for tax relief. I mean, revenue foregone of 1 lakh crore rupees on account of direct taxes. Where is the government going to make up all of that is a separate question altogether. But to expect that it will be the historical, what we've seen in the last few years, a 30% kind of increase as far as Capex is concerned. Even last year, the finance secretary had said, look, we have kind of reached a peak. We have reached a limit as far as how much we can do as far as government Capex is concerned. So the message has been sent out, not just in the economic survey yesterday, but was sent out in the previous budget itself by the budget makers who were here with us on the channel explaining how they were looking at this. But Mr. Chakrabarti, you wanted to make a quick point as well.
Yeah, quick
looking
point
at the numbers.
related to defense. It is RE number is roughly 4.56 and B number is 4.91. It's actually effectively an increase.
It's an increase. That's right. So that's a correction. There is an increase if you look at the RE number. So that's an increase as far as defense is concerned. I'm curious as to why we have Dixon, etc., selling off at this point in time? Because as I was pointing out again in the morning, we have Ashwini Vaishnav on record saying that the PLI component scheme is being worked on, and there was no guarantee that it would be part of the budget, but it's certainly something that consultations are taking place, so it can come post the budget, so the window is not shut, is the point that I'm trying to make. But is there something else? There was a whole host of issues related to customs duty rejig. I don't know whether that has anything to do with it or not, but perhaps it would be best to check with those companies directly. But that's the story as far as the markets are concerned. A quick final take before I let the two budget editors say goodbye. Ratin, we'll of course see you back in the evening as you digest more of the fine print, but on balance, your final headline.
The best thing that's happened here, and I'm not a Bihari, so I suppose the best thing that has happened here is for every Bihari in this country. And there's an election coming, so I understand. But I think is the promise to rationalize the tax code. What I'm very worried about, I'll come back with the exact numbers in the evening, is that the taxation system of India now is far more aggressive than it was yesterday. The proportion of corporate taxes haven't gone up much. Income taxes now kick in at 6 times the per capita income, and the revenue foregone from indirect taxes is almost zero next year, whereas the revenue foregone from direct taxes is 1 lakh crores, which essentially means that the Bombay Gymkhana has gained at the expense of the Aam Aadmi. And this is regrettable. I think I completely would like to endorse your point about capital expenditure. The government, to its credit, has very clearly said repeatedly that the heavy lifting on this front will ultimately have to be done with the private sector. And that has not yet been forthcoming, but there's only so much the government can do to raise capex. I'm not so puzzled by the markets not responding warmly to this budget. Because again, if it's only the Bombay Gymkhana whose net disposable income is going to go up, that sector is already maxed out. We don't see new sources of demand coming here that would give a permanent boost to the growth rate of the next 150, 200 million who don't pay taxes. And therefore, probably the markets quite correctly have reacted with caution, unlike us consumers who are very excited about the next thing we'll buy or the next holiday we'll take with that 1 lakh crores. In terms of fiscal prudence, I think this budget has done a very skillful job. 1 lakh crores is not a large amount in budget making terms, as also been attested to. However, it is the optics of doing that in personal income tax is absolutely massive, and that's a core support base of this government, and therefore this has definitely benefited them without too much cost to the exchequer. The government has stayed its course on fiscal consolidation, which is good. Let's see what's happened to expenditure, but that I'll tell you in the evening.
Okay, we'll hear back from you more on the expenditure side. Mr. Chakrabarti, a final take before I let you go.
One of the things which, since it came initially, on the agriculture side, a very comprehensive scheme has come.
Yes.
Normally, they are all divided up. Something for irrigation, something for fertilizer, something for. It's a comprehensive scheme which has come up. I didn't get the name correctly, but it covers 100 districts and covers irrigation, markets, technology, everything. Though what one misses out on agriculture is it's supply side heavy. It also covers warehouses, rural warehouses.
Correct.
I really welcome it. However, on agriculture, we are still supply side heavy. It has to be, the market part. Perhaps it's still a work in progress. Everything cannot happen on the budget.
I have the name of the scheme, the Dhan Dhanya Krishi Yojana.
Dhan Dhanya
Krishi Yojana in partnership with Skates, which will cover 100 districts. And the finance minister saying 1.7 crore farmers will be benefited on account of that. So you're saying
it's an excellent scheme. The other part is, second one is the part 2 of Swami. It was launched almost
the housing
4.5 years back for the stalled housing.
Yeah.
If you recollect, all of us see a lot of shells of housing lying.
He's being modest, he designed it.
And there 15,000 crore additional has been provided. Of course, I wish this would of course come as a mix from both government as well as private sector. I hope 90% of it comes from private sector. Let's hope, because it depends upon how the rules and everything work out in this. It's a very well worked out scheme, has been successful. And, it's only the risk weights that RBI is going to attach to the assets which would be standard. That will decide.
Right.
Third is on the regulation part. FSDC has been given the role on the financial regulations.
Yes.
which means adding a lot of muscle in the finance ministry to the financial market division and other division to see that they can, because they're all four powerful regulators.
Yes.
To bring them, even though FM heads it, but somebody has to really act it hard. So a lot of lots of muscle has to be added there.
Lots of muscle.
To ensure that direction gets taken, otherwise we'll miss woods for trees. And lastly, I'm very glad with the consolidation part, which is something I guess should, over a period of time, don't look at the market.
Yes, absolutely. Well, yes, consolidation, I think everyone concurs. That's positive. And two schemes that you specifically pointed out, the scheme for stalled housing, which gets an additional allocation, good move there. And of course, on the agriculture side, a more holistic approach with that Dhan Dhanya scheme. But Prashant, back to you. More information on what's happened to Dixon?
No, Shireen, as I was talking, I spoke with the Dixon management, and what they said is that if anything, actually what has come through is positive for their business. So, as the finance minister said, the basic customs duty on open cells has been reduced. They are setting up a display manufacturing capacity. We speak with them every quarter, and that's been something which the market is looking forward to. So, actually, it helps them. And they also said, the Dixon management has said that even for mobile parts, there are some reductions which have happened. And that is also actually positive. So, unaware whether stock was seeing a bit of a swoon, but you just see what's happening now. It's about 1,200 rupees recovery from the lows of the day on Dixon already. So it's actually almost flat now on Dixon. So I think, initial kind of knee-jerk reactions starting to get reversed. Even actually for insurance companies, you look at the price reaction, right? HDFC Life was down 7%. It's down 2.5%. Because, the dependence on the old regime is about 5 to 7% of individual new business new premium.
Prashant,
so a lot of it, there is excessive move, and then it kind of gets moderated.
I think what we have to keep in mind is today there isn't much volume. And perhaps that's why you're having these rather eccentric or volatile moves, because the volume perhaps is not like on a normal day. Remember, it is a Saturday, and foreign funds are not in the game. Well, actually, I want to look at it this way. Mr. Khara, you just correct me if I'm wrong. What could have gone to Capex 1 trillion less because, the increase is only 10%. And that 1 trillion actually is gone into the pockets of the taxpayer, right? Especially the small taxpayer, up to 12 lakh. Which means more people can spend, more people can take loans, retail loans, for instance. So, and normally the Reserve Bank's thinking is, when fiscal deficit is kept under check, they are more courageous to cut rates. Because you don't want fiscal looseness and monetary looseness together. If the fisc is tight, normally the central bank cuts rates. This is their normal thinking. So do you think that this is a boost for retail loans?
So I think, it is certainly a boost to the retail loans, because when it comes to the ability to repay, they have got a better ability to repay. So that is a positive. But, when it comes to decisions relating to the policy rate cut, etc., they have got multiple other factors which they have to evaluate. And perhaps herein, even if the policy rate comes down, whether the interest rate structure will allow the reduction will be a function of the liquidity. If at all, unless and until liquidity improves, I think my apprehension is that the ability of the banks to cut the interest rate would be little constrained.
Fair point. Well, I agree with you. Liquidity also is something which the Reserve Bank has been giving. So hopefully, going forward, we will see more such steps from them. Mr. Khara, thank you very much for being with us on such an important day. Sunita Reddy, the Managing Director at Apollo Hospitals, is also with us. Sunita, thank you very much for your time. Your first thoughts, there was a mention that medical tourism will be promoted. What have you made of the budget?
I think it's a fantastic budget, because what is good for every Indian is good for healthcare. And the first part of it, of course, lowering of personal taxation is something that is going to put more disposable income in the hands of many more Indians. And moving on, this will give them access to health insurance products. The 100% FDI in insurance, while it might not show on the stock market, I see it as a very positive move, because bringing in more liquidity will give insurance companies the ability to have higher risk pools, and therefore create products that the middle class can access. We have seen private insurance and insurance products grow by 25% in the last 3 years. This is the best way to access corporate healthcare. So certainly a positive move. The second is the focus on oncology and cancer. The incidence of cancer is growing at far more than 7%, which is reported, because it is not detected early. And with this focus, the dual focus, the first on creating daycare centers, they've mentioned 200 chemotherapy centers, which will cover all of the districts in the next 3 years. I think it's a great move. What needs to be done is to create a hub and spoke model and use AI and connectivity to make sure that we cover large populations. It would have been fantastic if we could have done this even on equipment that's needed for radiation. Currently, we pay between 28 to 36%. So a customs duty, a reduction on oncology treatment equipment would have been, very comprehensive for treatment of cancer patients. The third aspect is clearly the Heal in India, which you mentioned. And Heal in India, Heal for India, all of this is good. It's a $100 billion opportunity. And I believe that we have the capabilities in place. If you combine this with the skilling and the addition of 10,000 more medical seats, moving to 70,000, I think we can set up a very strong healthcare system that not only heals India, but heals for the rest of the world. And by doing so, like I said, it's a $100 billion opportunity. I think we will earn a foreign exchange, we will provide more jobs, and we will create a healthier India. So to me, the budget was definitely a step in the right direction.
Well, absolutely. And there was a mention of that in the speech as well, that promoting and enhancing medical tourism is also one of the focus areas for the government. By the way, look at the intraday charts of insurance stocks all over again. It's all happening right here because of a very sharp reversal playing out now on stocks like SBI Life, HDFC Life. Many of them have bounced back very significantly from the lows. Big uptick coming through as the market settles down and digests this. By the way, folks, I was doing rough back of the envelope calculations, trying to figure out how much do you save in this, new era of the new slab. So very rough. I mean, for someone who's earning 15 lakh rupees, my rough calculations show that in the earlier, this is the new concessional tax regime, but with the old tax slabs, that person would have had to pay 1,40,000 rupees in tax. Now the liability is coming down to about 1,05,000. So roughly speaking, 35,000 rupees of savings for someone who's earning 15 lakhs. Again, I'm not taking surcharge and cess, too many things going on at the same time. But roughly speaking, that's the saving that we're talking about.
No, the finance minister herself gave us those calculations. Those people earning 12 lakhs will save 80,000.
Yeah.
Those earning 18 lakhs will save 70,000. Yeah. And those earning 25 lakh will save 1,10,000.
Exactly, because for those who are earning 12 lakhs, the rebate itself is coming in. Yes. So it becomes nil. I mean, the rebate, which used to be only 7 lakhs, has now gone up to 12 lakh rupees with these new tax slabs. But anyway, it's anyone's guess. Now, where will this money be spent? Will it go in SIPs? Will it go to, buy new clothes? Stocks like Trent are surging about 7%. Will it go for travel and tourism and holiday? Or will it go in buying maybe better health covers? Because the market is worried on health insurance. And they're not being covered, with more people perhaps moving to the new regime. But there is generally higher disposable income. So could that benefit? Anyway, let me take that question to Nilesh Shah, who's joining in as well. Nilesh, the markets become so polarized today. All things economy are selling off and all things consumer are moving higher. But as the dust settles on the day and the budget documents, how do you think we are poised and, what next for a market that's been, hurting for several months now?
So while it is fashionable to say that market has been hurting for last 2 months, last 5-year return of market is 20% plus. So if you have given so much of profit, obviously there will be a consolidation or correction. This budget has clearly shifted focus from pure investment to also boost for urban consumption. And now that roti kapda makan is secured for most of the people, focus will be shifting to education, travel, entertainment, consumer durables and stuff like that. And that adjustment is happening in the market. More importantly, from a valuation point of view, capital good companies were pricing in price to vision ratio. So there is some amount of deceleration there. Consumer stocks, they normally trade at a higher valuation, but compared to their historically higher valuation, they were at a discount. So there is some amount of investor pulling over there. So we are seeing a distinct shift from infrastructure investments to consumption, both in the budget and hence in the market.
By the way, the market itself, it's not just life insurance stocks. The market itself is pulling back from the lows. Should keep that in mind. The Nifty's cut is around 60 to 67 odd points. That's the recovery that I'm talking about. Apart from life insurance, you've got stocks like Bajaj Finance moving higher. Of course, auto stocks are up. Aisha, for instance, is gaining more ground. And the Bank Nifty is also trying to reduce its losses.
You're right. Bank Nifty and mid-cap index were down about 1.5% at one point in time. Now down almost like 0.5%. So it's a fairly decent recovery that we've seen. Zia Modi, you've been with us for quite a bit. Thank you very much. But any last thoughts that you've heard, everyone? IFSC investments, anything from an investment point of view that you want to leave us with?
I think one will have to look at how the promotion of GIFT City takes place, Lata. I think there will be a lot of movement there. I think one thing that I focused on was the concentration that the FM gave to the MSMEs, given that, they apparently constitute 36% of our manufacturing and 45% of our exports. And that led me to think about what is the boost she has given to the skilling sector? Because we have Indians, but we need to have employable Indians. And I think there also the government has tried to do what it can in skilling. And in addition, I don't think anyone has mentioned the AI part of it, where the government has basically said that they're going to set aside a large amount to train people in AI for the Excellence Center. And I think that is one where both the country, the startups, and the foreign investment should converge well. And it's a new area for us. I think all in all, stable budget, no surprises from a foreign direct investment point of view. Some over-regulation by some regulators, which make it more difficult for FDIs and FPIs. But I'm assuming that will get sorted out at the back end. All in all, I thought it was fine.
Thank you. Thank you very much for that, for those wrapping up thoughts, Zia. And actually, under the FSDC also, they have, they are looking at an inter-regulatory committee, which perhaps will take out these extra compliance. Prashant, you wanted to say something? Go ahead, please. Yeah, Prashant, I think you're on mute.
Sorry, before Zia Modi goes, and unfortunately Kanabar is no longer there, but Nilesh Bhai is there. So a lot of things have been said about GIFT City and the positives. Yeah. In fact, I would say, despite my overall very positive view on the budget, and in fact, I believe it's the best budget in a long time, it did nothing to address the core problem of GIFT City, which is that under Section 9A of the Income Tax Act, which Nilesh Bhai is very familiar with now, fund managers like me or my peers who are seated in Singapore or Hong Kong or London, who are managing FII funds are effectively prevented from relocating to India, to GIFT City. So you can relocate a few funds and make it like a mini Mauritius. But unless the fund managers are allowed to relocate, GIFT City can't be made into the kind of city that our Honorable Prime Minister Modi ji has dreamt it to be. Just to complete the thought, metaphorically speaking, to grow a tree, it is not sufficient to have good soil, water, and sunlight. Most crucially, you need the seed. And the fund managers and investment teams, their investment managers are the crucial seeds to grow those trees, metaphorically speaking. So I must add that all this excitement around GIFT City results into nothing but zero unless that issue is addressed.
I'm glad you raised that, Prashant, and I want to go to Ashok on this because we were debating and discussing this earlier as well. What clarifications come and have it on the relocation part. That and one more thing, Ashok, I remember this was a very big ask earlier. Basically, some of the non-bank units that are operating in GIFT, they wanted to get parity with the bank branches, the bank units in GIFT, in terms of issuing instruments like ODIs to overseas investors. That was a big ask. I don't know, I've not seen it in the fine print so far, but your thoughts on some of the issues that Prashant has also raised.
No, you're right. I mean, I have now seen the detailed fine print on IFSC and the amendment required for Prashant to relocate to to India is still missing. I mean, it goes back, his and my discussion goes back to many, many years when we first made this request to the government. But sorry, Prashant, there has not been an amendment, and the rules still remain rather rigid, which effectively means that existing funds operating out of Singapore, most of them are now from Singapore, not so much from Mauritius, are finding it difficult to relocate their fund managers. You can relocate the fund, but if you can't relocate the fund manager, then who's going to manage the fund? And I think sooner or later that change has to happen. Having said that, there is an interesting change that they have made in the GIFT City rules, which is what they've said is, if there are two related companies and you have a treasury company located in the GIFT City, historically, when there is a transfer of money from one related company to another related company by way of a loan, it's deemed to be dividend in the hands of the receiving company. What they have now clarified is that if the giving company is based out of GIFT City, then any loan given by that company to a related company not based in GIFT City is not subject to deemed dividend tax. So that's a very positive step forward in terms of enabling large corporates to set up their treasury business, certainly in GIFT City, both domestic as well as global companies, without causing a deemed dividend tax. But to the point that was made by Prashant, we probably have to wait one more year.
And what about ODIs, Ashok? What about ODIs? Because some of Nilesh Bhai's peers, for instance, I mean, Kotak has a unit. Many other Indian entities have set up non-bank units in GIFT, and they all want to be able to do the business on ODIs as well, which I think the tax benefits are restricted to the bank branches right now. Did you see anything there?
No, unfortunately, nothing there either.
Okay.
No change in law. But just two other points that I'd like to make is coming back to MSMEs and Zia's point that there is a lot of focus on the middle class. I think we are missing the point on the number of new opportunities in terms of increasing the limit for both micro enterprises as well as small enterprises. You know, I think a lot of microfinance companies and unsecured lending, stroke even secured lending businesses with small ticket loans have gone through an immense amount of stress in the last 6 months. You can see the delinquencies, you can see the challenges in collection, and therefore you can see that several companies are either reeling under pressure if they're listed, or many that had filed for DRHP are not getting listed because of the environment. Increase of limits over there and providing insurance on a larger base, I think, is a very positive step. Government is giving an assurance to more and more lenders to say, you can continue the business. And we know that there is some pressure at the lowest end of the economy, but we will cover you with insurance by increasing these limits. That's a very positive step.
Got it.
On insurance itself, on the FDI side, I think there is a very positive movement. I mean, we have 22 odd companies that
Mr.
are...
Badva, sorry. I just wanted to, a point taken. I just wanted to clarify something. And I don't know if you've seen this. This is the point about bringing clarity in income on redemption of unit-linked insurance policy. And the wording is, it is proposed to clarify that the profit and gain from the redemption of unit-linked insurance policies to which exemption under Section 10D does not apply shall be charged to tax as capital gain. Is this the way it is worded? Does it look like it perhaps is retrospective? I mean, just your sense. Redemption from here on, basically.
Yeah, so effectively, if the redemption happens from today, it does not matter when you invested. Therefore, if you invested historically, but you redeem today, the language seems to suggest that it would be. I haven't read that still in the document. So my apologies that I can't provide you greater clarification. But if that's what it reads, then it means in some sense it's retroactive in nature, because past investments, if redeemed from today onwards or whenever the effective date is, shall become subject to tax.
So this is like what they did to debt funds last year when grandfathering was removed? Something similar?
Something similar.
Okay. I mean, that is... Zia, you want to comment quickly on this? Any thoughts? Okay. Okay, I think you're on mute, but I think you're saying you've not seen it.
I've not seen it.
I've not seen it. Okay, all right. We'll have to, I think, clarify with our with Sapna, reporter in Delhi, whether this is what they mean.
I'll have to run to the money control interview that I have right now.
Prashant, carry on. Let me just actually toss it across to Shireen now, who's at the CIA budget headquarters with the panel of guests there. Shireen, over to you.
Well, thanks very much, guys. Consumption is the theme that's playing out, and we're seeing a recovery even as far as the markets are concerned. The Sensex moving back into positive territory, but the man with the biggest smile, Sanjeev Puri, the president of the CII, as well as the chairman of ITC here with us. Sanjeev, many, many thanks for coming back into our CNBC-TV18 budget headquarters. Consumption, that middle class boost that was being asked of, the finance minister perhaps doing more than even what industry was expecting. What do you make of it?
Absolutely. I think the relief to the middle class is very welcome, and it's going to certainly provide impetus to consumption and therefore, contributing to the virtuous cycle of investment and employment. And this was much needed at this point of time. Of course, we do expect interest rates also to come off in February to reduce, and that should provide some further impetus. But the larger point of this also would be that this is the immediate relief. But a lot of sectors that have been touched upon in the economy are areas that which are very labor intensive.
Right.
And the economic activity increasing in those areas will have larger impact on employment generation.
Footwear, toys, tourism, all being identified as sectors.
Even agriculture.
Yeah.
It has enough people, but
healthcare.
Income can improve. Income can improve. So all this itself actually feeds into the virtuous cycle of, therefore, consumption and investments. So there are measures for the immediate and measures that will also unfold over a period of time. So from that perspective, I think is a very, very, very positive.
But, in terms of growth and in terms of providing that consumption boost, I mean, realistically, what are we talking about, given what the finance minister's already announced in the budget? As you pointed out in the morning, rural had picked up, urban was still suffering. Do you believe that this could alleviate the pain?
You see, it will certainly provide some impetus. And there are multiple things that come together, right? For example, social security for gig workers. That will provide relief on medical expenses.
Yeah.
So a lot of pieces like that are there in the budget. And as I said, as employment comes in employment intensive sectors, that further provides boost. So we'll have to look at the full picture. This is one element of it.
One element of it. Rajiv Memani, let's look at that particular element as far as the tax cuts are concerned. Revenue foregone of 1 lakh crore rupees on the direct taxes side, 2,600 crores on the indirect tax side. But the signal that the government has sent out clearly saying that, look, we want to come in and provide a shoulder to the middle class. The big takeaway, we've of course got two big elections, Delhi right around the corner and Bihar. And, that's the message the government's sending out.
Yeah, I think, I think we've had pre-budget discussions. Everyone was expecting relief for the lower and middle income. But this extent of relief, I don't recollect, has been given 1 lakh crore in personal tax, which is almost, about 7 to 8% of the total personal tax collection that the government has. So I think it's a very significant relief. And overall, if you look at the overall theme from a tax standpoint, I think a lot of it is based on just simplification.
Right.
From the new income tax, 50% of the provisions coming down in the new income tax bill, that will be tabled next week. All the other things that they have also done, whether it's on TDS, TCS, all the other areas that have been laid out, a lot of that is on simplification. Also in continuity, no significant changes anywhere except addressing some, minor tweaks here and there. Unless if something is there in the fine print, then we don't know. But this government generally, whatever is on the table. IFSC always gets, they're trying to encourage and project IFSC more. That's there. And overall, the emphasis, whether you look at the economic survey or you look at the budget, this ease of doing business. And I think it is so important to unleash the spirits and to ensure that India achieves its full potential. I think that, setting up the committee, coming out with in the next 1 year, setting up some competitiveness among states, clearly recognizing that a lot of these things have to happen in states. I think that's a big change. And the pillars that they have identified, and focusing, some of which Sanjeev mentioned, focusing on those 4 or 5 pillars that are so critical for growth in the next 10, 15, 20 years, including nuclear power and changes in the act. I think that was quite good to hear.
Yeah, a target of 100 gigawatts as far as nuclear power is concerned. Remember, the IEA has said that 2025 is likely to be a breakout year when we talk about nuclear energy. So India getting into the ring as far as small modules are concerned. But Chandrajit Banerjee, what the finance minister has delivered on the consumption side, perhaps some disappointment on the Capex side. Clearly not on the lines of what industry was expecting or even hoping for, but it's in line with what the government has been saying. So on balance, the balance has been done and the balance has delivered?
Absolutely. Of course, we talked about a 25% more. I mean, there's no restriction to asks, but
no, clearly there isn't. Clearly there isn't.
But yes, this was expected, and one had thought about that. But if you really look at the type of spend that one sees on the Capex, which is still, I mean, quite reasonable in terms of if you compare it, what goes into rural infrastructure, even this about the states that 50-year interest-free, so all of that actually would help in crowding even the private sector, which has been called a laggard, so to say, for some time. And I see that coming in because we see a focus on a lot through that will come through the consumption demand. So all in all, not really any disappointment with the Capex which the government has done, because it has done more than to offset through the consumption demand.
Done more than what was expected, certainly on the consumption side. Sunil Mujal, thanks very much for joining us. On balance, the big headlines, the big takeaways, what does the budget do to accelerate growth?
So actually the whole exercise, I think, was a balancing act between maintaining fiscal discipline, which the finance minister has put on herself over the last many years, at the same time figuring out a way to bring growth back in. So I think it's been done in multiple different ways. One is the building blocks, is on education, skilling, research, innovation, tech focus, that's very good. Second is picking specific sectors for high growth potential. Clean energy, deep tech, so the seeds, that's a massive area actually. What they've done in agriculture is a wide coverage. What I like is also focusing on some of the fundamentals, things like nutrition, things like the elderly, things like the farmer, small industry, export capability. So it's actually, I'm actually broadening the answer to your question, because I don't think it's only about that. It's not only about, growth is not something you can flick a switch and get tomorrow. But the tools have been put in place. And the point you were making just now about the higher liquidity in individual and families' hands will either go towards savings or investments or consumption. And all three will do good. Even if you say it's about 1/3 each, roughly. So you're talking about 30,000 crores coming into consumption this year. So some of it will need to go because personal and family balance sheets were getting a bit upset because there was over leverage taking place on individuals. I think some of that will go to offset that, as companies and banks have done over the last 7 or 8 years. So I think we will come out better, healthier, cleaner. I do hope, unlike what CB is saying, I was hoping that the infra spend would have been higher because this consumption takes a little bit of while for the virtuous cycle to kick in. Consumption can start, but consumption leading into production, leading into additional capacity, leading to jobs is a bit of a time lag. So that's one miss from my side. But I guess to be able to maintain the 4.8 instead of 4.9 at the FISC was a pretty magical number.
Oh, and it certainly was a surprise that came in there after having delivered on the kind of cuts that they delivered on. But Sanjeev Puri, let's talk about those untapped sectors where the government hopes to unlock potential. Tourism, this identifying 50 cities, PPP with states, PPP with industry as well. I'm not sure what the details are, but also including hotels as part of the infrastructure harmonization scheme that they're talking about. What did you make of that? And, a lot of actually the schemes that were talked about are work in progress. The actual operationalization still has to be detailed. So what do you take away from many of the announcements that came in?
See, First of all, many of the specific interventions that are there, you alluded to some in tourism. Then there are others, for example, in exports. I think the integrated approach, cross-ministerial approach, I think is absolutely the one that is required, because in the morning also we spoke about some of the issues that have to be dealt with, which requires a cross-ministerial approach. And something CI has also been talking about, having an integrated approach. Looking at setting up this committee on ease of doing business.
Right.
And taking an integrated and focused approach on agriculture, 100 districts, all-round development.
Yeah.
Taking an integrated approach on rural, the non-farm development. Really sending some development and resilience hubs for rural areas. So these are very fine ideas, very good ideas, and certainly will unlock the potential in many areas. Creating a framework for GCCs. GCCs are already, doing well in India.
And massive job creators.
Massive job creation, and the world has demographic challenge. So it's a great opportunity for India, and to provide impetus to it, to make some, today it's happening on its own, without really any impetus or for specific interventions. So right now, to create a facilitative framework for this, I think it's going to provide further impetus to it. Then the whole idea about the strong point of reforms and collaborating with states. I think this will provide a lot of impetus, because a lot of reforms now need to be done at the state level. Right? So a lot of the right things are there. And I think what I'm very happy to note also is that there is a lot of clarity on the mechanisms that will be used to do it. It is not just a statement without an institutional mechanism.
Sure. Rajiv Memani, the big headline for you as I say goodbye, at least as part of this session, but the big headline that you take away from what the finance minister has delivered.
I would say identifying the critical growth drivers for Viksit Bharat, ensuring that there is, as he rightly said, that there is a focused approach, interministerial approach for that, including ensuring that there is good state-to-state collaboration, and identifying all the levers, even AI, deep tech, global value chains. So at least the thought process of growth, the growth levers are very clear, and how you take that through. Now the main thing is, how these committees come, how the execution happens, and what changes on the ground.
It comes down to execution. CB.
So adding to what Rajiv said, I would think the National Manufacturing Mission. That's going to be very critical, because that's going to really cut across. And secondly, the element of trust, the Jan Vishwas Bill 2.0, that again is a very, very big takeaway for me.
Okay, Mr. Munjal, final word.
So the setting up of a group to review all rules, regulations de novo, I think is one of the most critical things which has not got enough airtime from any of you. Because for a long time, we've all been cribbing about excessive red tape. We've tinkered with the laws and rules for 50 plus years. We've scrapped many, we've decriminalized many, but it's not enough, because they were designed over 100 years ago. I think this is a fantastic move, other than making things easier for industry, accelerating M&A, and there's a whole bunch of things on that front, which I think are quite welcome.
Well, we'll have to wait at least a year for that committee to deliver its verdict on what will be axed, what will need to go, but a clear message being sent out by the budget. Mr. Munjal, CB, Rajiv Memani, Sanjeev Puri, appreciate you joining us here on the CNBC-TV18 budget headquarters as we digest what the budget will do in terms of growth and how it will propel the needle of the economy. We are going to take a break. We haven't taken one in a very long time. We're back in a moment with more. We leave you with where the markets are and come back for closing. Stay with us.
Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, "Deshamante matti kadoy, deshamante manushuloy," meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas, focusing on Garib, youth, Annadata, and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy, and innovation, securing energy supplies, promoting exports, and nurturing innovation. For this journey of development, our 4 powerful engines are agriculture, MSME, investments, and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms.
Welcome back. This is our special budget coverage on CNBC-TV18. We've been telling you what's come out of the budget, what's the positive and what's the negative, although there is nothing very much negative which we've been able to pick out so far. Usually about 2 hours, 2.5 hours later, you know, tax experts, and we've got many here in our studios and our offices who are poring over the finer details, will come up with this or that, you know, which is like, for example, last year there was, you know, that big googly that the benefits on debt funds were removed. I mean, the grandfathering relief was removed for debt funds. But this time around, at least so far, there is nothing as such. Markets have come off quite a bit from the day's lowest point, and we are down only 20 points or so, 23,490. And of course, what's doing well is consumption. And all kinds of consumption names. Even I saw Swiggy, Zomato, etc. surging quite a bit. So that's the picture. Well, we've got my colleagues joining in as well. Reema is here, Nigel is here, Mangalam. You guys were holding the bull by its horns, guys. And
I think one of the horns of that bull worked. That's the one in the green.
I mean, consumption is the story today,
Consumption is totally the story. You know, everyone was hoping for some boost coming into consumption itself, and that's largely because urban consumption had been struggling. We've been hearing from companies over the last couple of quarters, etc., as well. So we'll leave it to the tax experts to find out the exact benefits. But speaking from what the finance minister had said, and quoting her speech itself, zero income tax incidence for people up to 12 lakh rupees. That saves them 80,000 rupees annually. Income tax of 18 lakh will now have to pay 70,000 rupees less in terms of annual taxes, and income of upwards of 25 lakh rupees will save 1.1 lakh rupees annually in terms of taxes. That's roughly 10,000 rupees additional that people have per month for people upwards of 25 lakh rupees urban dwellers that are. And as a result of which, all these urban consumption plays, the likes of Zomato, Swiggy, Nykaa, you have the likes of ABFRL, which is the biggest gainer. You have Trent, which is doing extremely well as well. So the urban mass consumption spaces are doing extremely well. Premium was doing well already. And even in staples, if you look at something like a Nestle, 75% of their revenue comes in from urban India. GCPL, which is among the bigger gainers, 70% of their revenues come in from urban India. We have Britannia, Marico, all of them, nearly 2/3 of revenue as well coming in from urban India itself. Add to all of this, you have ITC, which is doing extremely well as well. Why? Because before every budget, there's a fear that there could be an increase in tax incidence out there as well. That's not come by. But most importantly, the FMCG sector had been underperforming for the last couple of years. If you look at, the valuations as well, if you look at names like HUL, you look at names like Britannia, you look at names like ITC itself, Nestle, Jubilant FoodWorks, all, the table comes up for you on the screen. If you compare it to the FY26, their current FY26 price to earnings, 1 year forward price to earnings, and look at it from a 10-year average basis, they've come down to the mean. And in cases like HUL and Dabur, they're actually below the mean as well.
So there is that
valuation,
comfort as well.
Yes, comfort as well. And then add to that, you had big gains in Capex and infra-related themes earlier. If there has to be a sectoral shift coming by, then it has to be the consumption space.
Will this cause that sectoral shift is the question. And we'll get to, the other sectors as well, one by one. Insurance, Yash is also standing by and we'll bring him in. But I think we have Ramdev Agarwal now joining us, Chairman and Co-founder of Motilal Oswal Financial Services. Ramdevji, good to have you with us here. Good afternoon. It's been a couple of hours now. Budget, I'm sure your team has briefed you. You've poured over all the important things. What's the sharp take at this hour, according to you? Is it how would you rate it if I were to rate it on 10?
10 out of 10 for sure. If I could give 10.5 also. So it is definitely 100 out of 100 budget. First thing is there is no negative. Right. Okay, at least as far as I know, there is no negative. So which is a big positive. Second, that whatever they said in economic survey, everything has given, it has found some space somewhere. So I mean, now insurance is 100%. That shows the kind of intention to attract capital into the country. Then they have also talked about global competency centers going to the tier 2, tier 3 cities. That's a very big revolution in India. I mean, it is after IT, GCC, evolution of GCC is very, very large. So I don't know what all they have done.
Yeah. No, absolutely. We'll get to some of those things in a bit, but for our market audience, right? What Mangalam was talking about, how much of this is this boost on personal income via personal income tax route enough to spur meaningful growth for listed companies, and where would that show up in a more meaningful way, according to you?
Yeah, so I think. Clearly, I'm not in a position to figure out when you get about when your income level is about say 20 lakh or 24 lakhs, and you get a benefit of about 70,000-80,000 rupees. Where does it go? My sense is clearly there will be that money will tend to go into the consumption, and that's what market is betting on. So I would go by the market judgment that. That consumption will, particularly the FMCG kind of item or Zomato and all who sell small ticket items, they would get benefit, clearly.
Mr. Agarwal, afternoon. This is Reema here. Now, Capex infrastructure was seen as a multi-year, multi-decade kind of a story. for India. But given what we've seen over the last 2 years and the thrust now on consumption combined with the welfare schemes announced by the government in the last 12 months, is there a shift now in the narrative from Capex to consumption? And therefore, should you step back from the Capex-related themes as a multi-year story, especially after the kind of returns they've generated?
Yeah, so I think as far as the economic allocation is concerned, that remains same, just that the market was sitting on the Capex side and there is a shift in the allocation. And in fact, we were saying that economy is growing at 7%, 7.5%, but there's no feel on the consumption side, anything of that kind of a growth. So now that consumption which was completely amiss, there is some money which has been put in the hands of this middle class. And because if you can't increase the income, you have to reduce the tax so that people can buy some more. And other way was to reduce the cost of the goods by reducing the GST and all. So that side they have not done. So they have put some more money in the hands of consumers. And see, real benefit is going to come from economic growth. Will they go from current 5.5% kind of a growth for last quarter? Will they again go back to more like 7%? The real benefit will come from there, and then from there allocation will happen.
No, fair enough. But what about the Capex story? Is there a change? Would you continue to allocate the same amount to the Capex infrastructure-related stocks, your defense, railways, etc., as before?
Yeah, so we will, of course, there will be reallocation of the resources. Ultimately, the fund manager has only $100. So out of 100, if I remove 10 to the consumption, obviously the 10 will come from the Capex side. I mean, if I say the Capex and consumption, there are only 2 buckets. In that case, if I increase the allocation to consumption by, say, 5 or 10 rupees, that will come, immediately will come from the Capex side. Though the story has not changed for Capex, but the story has improved for consumption. That's how I look at it.
How much do you think for a lot of the consumption companies is in the price? Because when we speak about urban consumption, you know, there are names like Zomato, Swiggy, Trend, etc. They are trading at high multiples already. It's the staples which are actually trading at 10-year means. So in that case, the incremental allocation to consumption itself, does that go to consumer discretionary urban consumption, which is already trading at elevated valuations? Or would you look at staples as well? Because now that rural is improving and there is some push to urban, maybe that makes a better value bet.
Yeah, so I think as far as the stock selection is concerned, it's also a question of at what price you are buying and what you are buying. So those things are about the stock picking. But broadly, if consumption is going to happen, where is the actual value lying? Say, I would think that all the digital companies, quick commerce companies, that's a good place to, if they get a little more booster, I would rather spend there than the 70, 80, 100p old companies, where the growth rates at best will be 10, 15%, whereas here it is like 70, 80%. So that's a matter of choice. This is what I'm saying, but somebody else will have some other view. Right. But clearly, consumption companies, if yesterday it was worth 100, today it is worth 105. That's what market is saying.
And another way of playing consumption is also via autos and some of the consumer finance companies.
Yes.
Would you bet on any of those as well, or maybe you will look at just some of these new age consumer-focused, tech-focused consumer companies itself?
No, I mean, see, I don't manage money, so. Of course, managers will go deeper into the thing and they'll talk to the companies, and just that little provision has come in the budget, it doesn't mean much overnight. I mean, Monday, a lot of things will get equalized or things like that. But I mean, individual companies are very important. So and there is going to be a lot of second-tier effect, like the entire tax benefit is not going to flow into just the consumption companies. That, in fact, the capital markets can benefit significantly, because the lot of people who are well off, say about 25 lakhs and all, they're not constrained by the income for the consumption. The incremental a lakh rupee comes to them, that a significant portion might come to the capital market. So we'll further examine. Right now we are just in the in the mood to react to what is given. Just that there is no negative and positive tailwind is there for consumption, auto or things like that. So that's how market is sentimentally moving that side. Because there is no seller there, there is only buyer. On the Capex side, there is no buyer, there are only sellers. That's what is reflecting right now in the market.
All right.
The real rational movements will start happening next year.
And, okay, no, absolutely. You said that your fund managers will speak with companies and figure out exactly what is going on. You may want to listen in, Ramdevji, to this next conversation, because it's a space where a lot of the fund managers, your fund managers, have been bullish as well. EMS, right? And Dixon is the leader. We have Saurabh Gupta, CFO at Dixon, joining us. The Dixon stock saw almost about a 1,500 rupee swoon. It sold off very aggressively, and then it basically came up very sharply. Saurabh, good to have you with us here. The basic custom duty on open cells has been brought down. Whereas as far as flat panels are concerned, the customs duty has been taken up. This is at the margin. How does this affect you, Saurabh?
Yeah, so definitely interactive flat panel display, the duty going up from 10 to 20% is a big positive for us because we have been manufacturing this for last 1 year. So this will trigger more domestic manufacturing, and we manufacture for some of the marquee brands. And this is a good industry. So we think this is a major positive for us.
How major you think, Saurabh? Can you any way to kind of quantify this? How much was coming in, and how much of that import will now become unattractive?
So my sense is this is broadly a 5,000 to 6,000 crore industry in India, and large part of it was service to imports. We also had a small revenues coming in last year, but definitely this would now trigger a large part of import substitution, and we should have a decent portion of our revenues in the next 1 year should start coming from this category.
Mr. Gupta, afternoon. Any other measures that have been announced in the budget which impact you? And if yes, if you could explain?
Yeah, so duty has also been cut on some of the mobile parts. We are also examining it, but that is also a big positive because if India has to be competitive and industry has to be competitive as far as exports are concerned, because we're already exporting some of the duties, high import duties that was levied on mobile phones. So that is a big positive, especially when we have all the brands with us on the Android ecosystem, and we are already exporting for some of the brands. So this is also add to the competitiveness of our industry and for us.
All right, so sort of just net, we want to understand, going by the kind of volatility that we saw on the stock price today, you're not seeing any negatives in this budget for Dixon. In fact, every statement that you've made it's positive, right?
It's positive, and this 12 lakh relief also is a big positive for us because demand lately has been slightly subdued. I think so this would really trigger that positive sentiment and demand in India.
And that open cell bit, Saurabh, that is also something.
That is also positive because the parts of open cell, especially for the TV parts. So we also manufacture, do the display assembly for mobiles, IT hardware, and hopefully in TV we had thought in future. So if the parts come at a lower duty, that also is a positive for us.
Right. And what about capacity? I mean, for the incremental demand that you foresee coming in on account of import substitution, do you have the capacity for the same?
Yeah, we already have a capacity for this, especially for this interactive flat panel display. We already have a capacity in our Tirupati plant. And for the display assembly, we are setting up a unit in Noida, which hopefully should be commencing operations by Q2 of next financial year.
Just for better understanding, what proportion of your revenue comes in from a product like this?
So as of now, it's a small revenue. It's around 200 to 300 odd crore revenues. But clearly, we see that the industry potential is almost 6,000-7,000 odd crores. And large part of it was service through imports. Now it will really trigger that domestic manufacturing, like the way a 20% duty on all the other products have triggered domestic manufacturing. Now the same thing will apply to IFPDs as well.
And at peak capacity, what is it that you can do from this product itself? Currently, it's 200 crores. You have capacity headroom. How much can you do?
My sense is we should be targeting somewhere around, at least in the first year, somewhere around 800 to 1,000 odd crores, if not more.
Okay, and the thing, as you said, the other one is, of course, the personal income tax cut, right? Phone sales has been very sluggish for the last at least 6 months, if not more. So we were talking with Ramdevji on the other side. I think he's still with us, and he was saying, I'm wondering where will people spend this 60,000-70,000 rupees. So phones definitely is one area as well. Saurabh, thank you very much for joining us. Quick reaction there. Ramdevji, if you're there, if you heard the Dixon management, any thoughts here?
Yeah. I think he was the guy to talk about Dixon. I mean, I think, see, what is happening is market is in too much of a hurry. So you saw the cut, I mean, stock slumped and again came back all the way. I think even markets, the moment fiscal deficit number came, to about 4.4, markets sold off.
Yeah.
And then slowly it is recovering to when the thinking is happening that this is actually a positive thing rather than negative, crowding out will not be there. So I think by evening when everything is thought out, I hope there is not much of, between the lines, there are not too many negatives. I would think that market will recover. And then it will go back to its own momentum in terms of whatever is happening globally.
Now, you know, Ramdevji, from market perspective, they had two asks. One was that the RBI goes ahead and loosens some liquidity, and hopefully they've done some bit of it, and next week we see a follow-up. And the other one was that the Capex spend continues.
Yes.
You have given this budget 10 on 10, 100 on 100, 10% marks, so to say it. But, you know, don't you think that that little bit of a capital expenditure push is missing, and that would have been actually the cherry on the cake?
Actually in capital, right now what has happened in actual, they have not been able to execute what was projected. Say it was projected for 24-25 to be say 11.2 lakhs. They are barely able to do 10.1, and I'll be surprised if they finish even 10.1. You know, because most of the momentum has started only in December. So you are left with only just about 2.5-3 months. So my sense is that they may not be able to even complete the actual what they are talking about. Because it has to be a cash accounting, isn't it? You have to actually execute and pay. So even if government wants and orders are not given on time, which is slipped because of the elections and all, so the next year, again to, make a comeback and spend more than 10-15% would be very tough. So they are being very practical at about 11.2 lakh crores next year's execution. And if they execute full 11.2 next year, I think the momentum in Capex would broadly be maintained. And if by chance economy actually recovers to 7-7.5%, they will have enough margin in terms of tax collection. Tax bonds should be very good, and hence they can, in the second round, they can further allocate for the Capex. But I think the intent is very clear that they'll keep pushing the Capex in various segments.
Ramdevji, just one quick thing. I know you don't manage money directly, but you have a defense fund. Defense stocks are all selling off. 4-5%.
Yeah.
Any feedback you've got from your team?
Yeah. No, I mean, Prashant, I'm just in the studio itself.
Okay.
And see, those guys are also talking to them, understanding. It is very difficult to develop anything. And in any case, it's an excess fund, in the sense that it's an index fund. So they have to allocate whatever is the index composition is saying. So per se, in passive funds, you don't have any option but to allocate the way index is designed.
Right.
So, to that extent, active manager doesn't have much role to play out there.
Right. We request you to stay with us, Ramdevji. You know, the interesting thing about the way these stocks are moving also is that there is no counterparty today. It's a Saturday, right? So no FIIs. And a lot of these FNO stocks, which had been beaten down, are seeing big spikes. Trent, for instance, is up 8%. DMart, you're talking about that stock, is hit the temporary freeze at a 10% up move.
Oh, wow.
We're seeing big traction on Zomato, up 7.5%. AB Fashion and Retail up nearly 4-5% as well. And you're speaking about ITC, how there has been no tinkering with tobacco taxes. That stock is up just around 3.5-4% in context of the way the market is right now. But look at something like Godfrey Phillips. That too is up close to around 13.5%. So it's a big move that we're seeing in a lot of these stocks. How much of that is, because of the impact of no counterparty right now? How much of that is on account of the impact of...
Mangalam, but to be fair, the counterparty usually is on the sell side.
Yes.
So they are there.
So which is why the exaggerated up move, right? That's the exaggerated up move is what I'm trying to say.
You're saying they're up.
There is no seller.
The big seller is away, and there is, the FNO impact as well. But
we're seeing some big moves even in the textile, footwear, leather-related names. Look at a Mirza International. We've practically forgotten about that stock. That's up close to about 20-odd%. So Campus Activewear, that's another one, as the government spoke about it, right?
They spoke about it. There are two parts to this. One, these sectors, these stocks were beaten down. Secondly, while they're focusing on exports, also remember the rupee is closer to 86.5, right?
That's a tailwind.
So that's a big tailwind coming in for all these exporters. And again, the lack of any counterparty out here as well. So we'll keep an eye out on all of these stocks. But we do have Sandeep Bhatia, who's the MD, Head Equity India, Macquarie, joining us now. Sandeep, how would you rate this budget? Point number one. Secondly, the Capex versus consumption debate. Does it shift towards consumption from here on in terms of allocation?
Well, I think it should definitely shift to consumption, and there's no reason for it not to be. I've said this on your channel before the budget was presented, that we need a tax cut up to 12 lakhs of income, and the finance minister delivered exactly on that. So what do I say? I think it meets the prescribed cure for the economy, and to that extent, it's a good job done.
Sandeep, I remember you saying in the morning that Maruti would be a stock to look at if the government chooses to prioritize consumption, which they have. And Maruti is a stock which is up 5.5% because small car sales have been lagging, and that could get a boost. So tell us, the stocks that have, swum into your ken because of the announcements that we've heard in the budget, particularly on the consumption front.
So the entire consumer sector has been a laggard. And again, just for the sake of a proper disclosure, that doesn't mean that one budget will change the entire story of consumption in India. But yes, it's a good 1 trillion rupee or $11.5 billion tax break, which comes to every taxpayer every year, year after year. And therefore, it is a meaningful tax break. Therefore, all the consumption stocks are going to go up, and that's what's happened today. But we should also remember that finally it's earnings that matter. I think the large cap consumption stocks have suffered. Volume growth is in very low single digits, if at all. And these competitive issues or these demand issues, until they are resolved, will these stocks remain expensive. So despite today's movements, and anyway, I think as all the anchors have been discussing, we don't have a fully functional market. On the other side, we don't have the other institutional players, which are the foreigners. We will definitely see more supply of stock come through when the market is fully open on Monday. Okay. So some kind of rationality will come in stock prices then.
Okay, all right. Hi, Sandeep. Always good to speak to you. I recall the last time we chatted, you said that the quick commerce space could have a big potential, but you're fairly cautious on this space. Now these stocks have come off, from the top. You have this bit of a booster shot as well that's coming in there. Still cautious. Zomato now is one of the top gainers as we speak on high volumes as well.
See, today's movement is not a benchmark to change anything on any sector or stock. Okay, I think all of us are know that. People still ask these questions because that makes good headlines. But I think the whole market is expensive. The whole market needs to correct. I've been saying that multiple times whenever I come on the channel. I continue to reiterate the market needs a correction. But in the near term, let me tell you, I also expect a rate cut on Feb 7. So I think we have to see some positive news on the economy. Yeah. The tax cut has happened, the rate cut will happen. So yeah, in the near term, the market will show some strength, which is fine.
No, absolutely. I was actually going to ask Ramdevji that rate cut. Next is North Block is done. Main Street is next. Ramdevji, 7th of Feb, next Friday. So what is your sense of
it's very crucial.
Yeah,
not only the
if you'll get a say you get more measures, you get a rate cut, you get guidance of maybe a little bit more. We're presuming, but if that were to come, where does that place the market according to you?
See, market, nobody knows, even I don't know what it will do in next 15 days, 20 days, because there's so many players. The foreigners are very large chunk for the short-term trade. So I wouldn't know how they will react. There is a global allocations and things like that. But as far as our economic performance is concerned, I think the demand, aggregate demand is dependent on the credit flow. So the credit flow has slowed down to more like 9-10%, 10.5%. That must go to 15-16%. And when that will take some time. So I'm sure the economic activity will also take some time. So it might take 2 quarters, 3 quarters before that pickup happens. But the turnaround in the credit cycle, that year-on-year growth from 10% goes to 11, 12, 13, that's what I expect. And that's what even the governor should be indicating in their next policy meetings and things like that.
So, yeah, near term is, okay, just let me put it another way and we'll ask Sandeep this as well. And I think Hirenvid is also joining us. So Monday morning we come back, Ramdevji, and say we got this weekend tariff risk also, right? Trump's, maybe we wake up to 10%, 20%, we don't know, tariffs. So is that, will there be collateral damage in that sense or what's your sense?
See, Monday is Monday. We are on Saturday today. Whatever was the activity today, we have taken care of that. Monday will its own balance sheet of activities, whether it's Mr. Trump, whether FIIs, interest rates, I mean, then it takes over, you know. So today's job is like which way the wind is blowing. Today, wind is blowing towards consumption. That's what has happened. And I think market in next 1 hour should take a call.
Ramdev
is the bull. He's given 10 on 10 and he's saying Monday ka baad Monday dekhe.
By the way, he's sounding like a full philosopher. And you're saying Saturday hai. And by the way...
philosopher नहीं, अभी क्या कर सकते हो? मतलब, you know, Prime Minister ने सवेरे बोला कि लक्ष्मी जी के आपके पास आशीर्वाद रहेगा middle income group के ऊपर. And that's what she has showered.
Oh, she has. She has, absolutely. Thank you very much for your time, though. Appreciate it very much here. And Mangalam and Nigel, you guys always make the point about Fridays and Saturdays and
Saturday and Sundays.
And beverage stocks. Radico has moved up 9%.
I have to get Varun beverages actually.
Actually, you know, Rima, I just want, you know, I think we need to check out if there is something that's come on the telecom space, because as we speak, you know, we just entered the studio around 20 minutes or so ago. Idea is a stock that's locked in upper circuit. I think it's up close to around 10% as we speak. And Industars is the other one as well. So both those two stocks, I don't know whether we have got any kind of details with regard to a potential relief or something that the street wants to read with regard to that. But both these two stocks, they are firing away, both of them at the high point of the day as we speak. So we'll wait by Rima as well as, you know, just checking up. And I think our ticker team as well will try to alert with regard to that. Both those
Bharti is not moving. So usually Industars moves when Bharti does because the fortunes are linked. But Bharti Airtel as a stock, if you're looking at pure telecom industry, Bharti is up close to about 0.5%. But yeah, there has been a little bit of an uptick. So we'll try and find out if there was anything in the budget.
All right. Well, let's welcome Hiren Ved onto the show as well. Hi, Hiren. Good afternoon and good to have you in. Well, the markets have been seesawing in today's trading session, trying to, you know, analyze this budget. Some would argue that maybe, in fact, we required a bit of a more, you know, push with regard to the Capex, while others are quite happy with regard to the consumption boost that we've got. How do you rate this budget?
I think it's a very balanced budget. I think what was lagging was consumption, and I think by giving a tax cut, you've given a push to a part of the economy which was struggling. I also believe that people are not thinking through as far as the Capex number is concerned. So I think, you know, on day one, whatever hits you on the face, people tend to react, you know, instinctively. But let me give you some sense on the Capex itself, right? So they had budgeted for 11.1. They finally revised that to 10.2.
Yes.
We have the numbers from April to December. The December number was a big number, 1.7 lakh crores, right? If you take April to December, then you have essentially 3.4 lakh crores to cover in Jan, Feb and March of this year, and 11.2 lakh crores in all of next year, which means you have to spend 14.6 trillion rupees in the next 15 months. To give you context, the first 9 months, the average monthly run rate was 76,000 crores of Capex. If I now take 14.6 lakh crores, then the average monthly run rate for the next 15 months is going to be 97,000 crores. I don't think people are thinking in no 15-month period have we seen a spending of 15.6 trillion rupees, right? Now, this is obviously assuming that whatever numbers they have given, they are to execute. But if you purely look at the
Hiren, you know, we request you to just hold on to your thoughts for a minute. We do have our colleague Parikshit, who's in conversation with the Commerce and Industry Minister Piyush Goyal. So you might want to listen into this, and thereafter we'll hear your thoughts once again.
Right, joining us right now is Commerce Minister Piyush Goyal to speak to us about Union Budget 2025. The big push was supporting the middle class, startups and the manufacturing sector. Mr. Goyal, how do you think this budget fares in terms of giving more consumption power back to the middle class? Because that had been a pain point over the last few quarters.
Well, it's a very transformational budget. It's balanced. Continuity is evident in the budget, but very strategic in its outlook. It has planned a vision very holistically. Now, the benefits given to the middle class. It straightaway results in money in the pocket of the middle class. India has a very rapidly growing middle class with 25 crore poor, having come out of multidimensional poverty, you are rapidly seeing more and more people with increasing incomes. Their disposable income becomes much bigger, savings of up to 1 lakh of rupees for all those who are earning up to 25 lakh rupees. And for those who are in a job at 12 lakh 75,000 rupees salary, you have zero income tax. I think it's a very, very big message that so far the government had focused on investment-led growth. Now we will have investment-led and consumption-led growth, which is how developed economies of the world have been created. So it's the right pathway to a developed India.
Sir, there was a concern about India's growth going forward, whether there are structural problems. The CA has said that the growth in this fiscal could be between 6.4 to 6.8%. What is your view on what this budget will now do for growth revival for FY25 and FY26?
My sense is this budget and the number of elements it touches, whether it's MSMEs, whether it's farmers, whether it's the youth for creating more job opportunities, our startups, creating the right infrastructure mix, monetizing 10 lakh crores worth of assets for reinvestment into the economy, focusing on ease of doing business, the Jan Vishwas Bill 2 also coming in now, working with the states.
मिशन को ड्राइव करने वाला है। ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा। मैं वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम को इस जनता जनार्दन का बजट, पीपल्स का बजट, इसके लिए बहुत बहुत बधाई देता हूं। साथियों, आमतौर पर बजट का फोकस इस बात पर रहता है कि सरकार का खजाना कैसे भरेगा, लेकिन ये बजट उससे बिल्कुल उल्टा है। लेकिन ये बजट देश के नागरिकों की जेब कैसे भरेगी, देश के नागरिकों की बचत कैसे बढ़ेगी और देश के नागरिक विकास के भागीदार कैसे बनेंगे, ये बजट इसकी एक बहुत मजबूत नींव रखता है। साथियों, इस बजट में रिफॉर्म की दिशा में महत्वपूर्ण कदम उठाए गए हैं। न्यूक्लियर एनर्जी में प्राइवेट सेक्टर को बढ़ावा देने का निर्णय बहुत ही ऐतिहासिक है। ये आने वाले समय में सिविल न्यूक्लियर एनर्जी का बड़ा योगदान देश के विकास में सुनिश्चित करेगा। बजट में रोजगार के सभी क्षेत्रों को हर प्रकार से प्राथमिकता दी गई है। लेकिन मैं दो चीजों पर ध्यान आकर्षित करना चाहूंगा। उन रिफॉर्म्स की मैं चर्चा करना चाहूंगा जो आने वाले समय में बहुत बड़ा परिवर्तन लाने वाले हैं। एक, इंफ्रास्ट्रक्चर स्टेटस देने के कारण भारत में बड़े शिप्स के निर्माण को बढ़ावा मिलेगा, आत्मनिर्भर भारत अभियान को गति मिलेगी। और हम सब जानते हैं कि शिप बिल्डिंग ये सर्वाधिक रोजगार देने वाला क्षेत्र है। उसी प्रकार से देश में टूरिज्म के लिए बहुत संभावना है। महत्वपूर्ण 50 टूरिस्ट डेस्टिनेशन, वहां पर जो होटल्स बनाएंगे, उस होटल को पहली बार इंफ्रास्ट्रक्चर के दायरे में लाकर टूरिज्म पर बहुत बल दिया है। इससे हॉस्पिटैलिटी सेक्टर को, जो रोजगार का बहुत बड़ा क्षेत्र है, और टूरिज्म जो रोजगार का सबसे बड़ा क्षेत्र है। एक प्रकार से चारों तरफ रोजगार के अवसर पैदा करने वाला एक क्षेत्र को ऊर्जा देने वाला काम करेगा। आज देश विकास भी विरासत भी इस मंत्र को लेकर चल रहा है। इस बजट में भी इसके लिए भी बहुत महत्वपूर्ण और ठोस कदम उठाए गए हैं। 1 करोड़ पांडुलिपियों के लिए संरक्षण के लिए, मैन्युस्क्रिप्ट के लिए ज्ञान भारतम मिशन लॉन्च किया गया है। साथ ही भारतीय ज्ञान परंपरा से प्रेरित एक नेशनल डिजिटल रिपोजिटरी बनाई जाएगी। यानी टेक्नोलॉजी का भरपूर उपयोग किया जाएगा और हमारा जो परंपरागत ज्ञान है उसमें से अमृत निचोड़ने का भी काम होगा। साथियों, बजट में किसानों के लिए जो घोषणा हुई है वो कृषि क्षेत्र और समूची ग्रामीण अर्थव्यवस्था में नई क्रांति का आधार बनेगी। पीएम धन धान्य कृषि योजना के तहत 100 जिलों में सिंचाई और इंफ्रास्ट्रक्चर का डेवलपमेंट होगा। किसान क्रेडिट कार्ड की लिमिट 5 लाख तक होने से उन्हें ज्यादा मदद मिलेगी। साथियों, अब इस बजट में 12 लाख रुपए तक की आय को टैक्स से मुक्त कर दिया गया है। सभी आय वर्ग के लोगों के लिए टैक्स में भी कमी की गई है। इसका बहुत बड़ा फायदा हमारे मिडिल क्लास को, नौकरी पेशे करने वाले जिनकी आय बंधी हुई है ऐसे लोगों को, मिडिल क्लास को इससे बहुत बड़ा लाभ होने वाला है। उसी प्रकार से जो नए नए प्रोफेशन में आए हैं, जिनको नए नए जॉब मिले हैं, इनकम टैक्स की ये मुक्ति उनके लिए एक बहुत बड़ा अवसर बन जाएगी। साथियों, इस बजट में मैन्युफैक्चरिंग पर 360 डिग्री फोकस है ताकि एंटरप्रेन्योर्स को, एमएसएमईज को, छोटे उद्यमियों को मजबूती मिले और नई जॉब पैदा हो। नेशनल मैन्युफैक्चरिंग मिशन से लेकर क्लीन टेक, लेदर, फुटवियर, टॉय इंडस्ट्री जैसे अनेक सेक्टर्स को विशेष समर्थन दिया गया है। लक्ष्य साफ है कि भारतीय प्रोडक्ट्स ग्लोबल मार्केट में अपनी चमक बिखेर सके। साथियों, राज्यों में इन्वेस्टमेंट का एक वाइब्रेंट कॉम्पिटिटिव माहौल बने,